What's up, everyone? My name is Ali. Welcome back to my world of stocks and welcome back to my 3 stocks on sale series for the month of April 2024, where in each episode I pick 3 new stocks that I feel are looking attractive at today's prices for the long term. And to make it more fun and interesting, I specifically choose one lower risk, one medium risk, and one higher risk option for added variety. And this month in particular is a special episode because it includes a brand new stock that I just added to my personal portfolio for the first time ever. So I can't wait to hear your guys' feedback on that new addition. But as always, guys, just please remember to do your own extensive research and make your own decisions. I'm just showing you some stocks that I like based on my own opinion. But regardless, I hope that you are enjoying the series, and let's not waste any more time because I can't wait to share these stocks with you. So let's just go ahead and jump straight into it. All right, so starting with our lowest risk option first, this month I'm going with a new favorite of mine that I just started buying for the first time ever in VeriSign, ticker symbol VRSN, which some of you may think that you're not familiar with this company, but in fact you probably use their services almost every day, as they're actually the largest domain registry in the world who manages the infrastructure that certain top-level domains run on, like .com, .net, .edu, and more. Basically, the way it works is that whenever a customer creates a new website using one of these domains on a site like GoDaddy, for example, well, VeriSign is able to collect fees for managing those domains, making sure that they run properly while also providing cybersecurity, which, by the way, VeriSign has the biggest track record of success out there with over 26 years of uninterrupted service. So it's been a very sticky and reliable business for them. In fact, they even have an exclusive agreement with ICANN, the Internet Corporation of Assigning Names and Numbers, which is the nonprofit governing body of the internet. And as such, VeriSign has been able to benefit from a sort of monopoly over these specific domain types. And so as the internet continues to grow larger, so too does the demand for VeriSign's trusted services, as they already provide infrastructure for more than half of all the world's DNS hosts and routing support for over 172 million domain names using just .com and .net alone, while also processing more than 324 billion domain lookups every single day. How crazy is that? And as a result, their revenues have been rock solid over the years, especially during the pandemic, where we saw an even bigger rise of internet usage. But even coming off of that, growth has still maintained above a mid-single digit rate for sales, while operating and free cash flows continue to rise every year as well. Even their EPS is expected to rise by a higher rate over the next 5 years versus the previous 5 too. And yet despite that, there's been a bit of a pullback recently. Now, normally VeriSign is a very reliable stock. However, in recent years, it's plateaued a bit and even lost more than a quarter of its value from the top. My guess is that investors just don't really see as much potential now coming off of the pandemic, where the comp years might be a little harder. Plus, the economy has been a disaster with sky-high inflation and interest rates, which investors are probably worried will hurt consumers and drive less traffic to online shopping and other stuff like that on the internet. But with the recent pullback, now comes a much cheaper valuation with a forward PE ratio that is over 16% cheaper than the sector and over 30% cheaper than their own 5-year average as well. Plus, the current share price is also much lower than analyst price targets, with even the lowest target still sitting about 14% higher from here, while the median would see about a 20% rise and the highest would climb more than 25% too. All of this tells me that the stock is probably, I would say, pretty undervalued here at these levels. So I went ahead and picked up a few shares for myself, and I'm even thinking about adding it to our community portfolio too. So let me know what you think about this one, guys. Let me know if you'd like to see it in there as well. But I'd love to hear your thoughts because I just recently became a fan of it myself, and I'd love to hear what you think too. All right, moving on to stock number 2 though. For the medium risk options, I sometimes like to throw in a dividend pair to kind of make up a little for that risk. And this month, I just can't believe how cheap this stock has become. I know it's a pretty, controversial one for some, but I just think that the stock itself is a deep value at these levels. And That is the pharmaceutical giant Pfizer, ticker symbol PFE, who from the top has not only lost more than half its entire value, but is also trading at a decade low, which is very surprising to me. Now, the reason for the drop is almost entirely to do with the pandemic, or more specifically coming off of it, where demand for the pepperoni V-shot continues to dwindle down. In fact, here's a chart from Statista showing how daily doses fell from the millions down to just the thousands last year, and it's probably even lower here in 2024 too. Now, granted, there is still some demand there, but I'll be honest with you guys. I mean, I don't personally know even a single person at this point who is still taking boosters for the pepperoni. And when you look at how that's affecting Pfizer now versus back then, well, it's like night and day. I mean, their revenues literally doubled just from the pepperoni products alone. And here's a breakdown of that from Statista in case you don't believe me, but they had basically doubled and instantly turned Pfizer into the largest pharmaceutical company in the entire world at that time. However, in 2023, the sales absolutely crashed back down, losing close to half their sales again, and are now back down to just a single-digit growth rate going forward. But here's what I always argue in favor of the stock. All of the profits that Pfizer needed from the pandemic have already been made. In fact, when you look at all the extra cash that they generated, it correlates almost perfectly with how much money they've spent since the pandemic on acquiring new companies. And here's just 6 of them alone. There might even be more than this, but this is just kind of what I can recall from the top of my head. But it equates to around $70 billion worth of acquisitions. And let me just break down how insane that is for anyone like not understanding my point here. Basically, what happened was we had a giant pandemic, right? You know, regardless of what any of our personal opinions are on that, it was still by far the most talked about and impactful thing happening around the world. Many people consider it like a once in a lifetime type of event. But, you know, regardless, in my head, how I kind of imagine it all going down was like the government just kind of went out and said, hey, can anyone develop a V-shot for this thing? We'll cover all of your expenses. We'll pay for it using taxpayer money, and you can then keep the product and sell it and make all the profits you want from it. And so Pfizer was like, yeah, we'll do it. And then they kind of got together and went into a board meeting and was like, hey guys, like, how do we like benefit from this? Because the pandemic is probably not going to last forever, right? So what do we do here? And then someone else on the board was like, well, let's just sell as much as we can right now. We'll take all the profit. We'll buy up a ton of other companies with all that money. And then that'll ensure that we continue to dominate well into the future. And that's basically what happened here, because if you look at what we're left with here in terms of Pfizer, okay, we've got over 110 new medicines in development, which by the way includes a new combination V-shot for both the pepperoni and the flu. How interesting is that marketing going to be? But on top of that, last year, Pfizer got more than double the FDA approvals than any other company and more than twice as many as every drug maker over the past 3 years. That's crazy. And they still have some new treatments doing very well, like their RSV shot and their oral migraine therapy Nurtec. They're still almost the largest pharmaceutical company in the world, because J&J doesn't really count here, so Statista shouldn't be listing them, but you know, they spun off Kenvue and their sales are based off of other things. So Pfizer is pretty much tied with Merck as the largest, and they're still generating billions more in sales today than they did pre-pandemic, yet the stock price is even lower today, with the dividend yield rising to above 6%, which is pretty much the highest it's ever been, and the valuation is dirt cheap at over 30% lower than the sector on a forward PE and PEG ratios. Now, granted, operationally, the company is a bit of a mess right now. The bottom line is obviously hurting a lot because of the fall in pepperoni sales, and that is going to weigh on them for sure. It's a very difficult comparison to the prior years. Plus, they also acquired a bunch of other companies. There's going to be added costs associated to that. And when you look at the dividend, the payout ratio is pretty high at this point, at this moment in time. And so, you know, if that dividend was to get cut, obviously the stock would tank even further from here. But that's why I categorize this as like a medium risk option here, because there is some risk there. But longer term, I feel like that risk is more short term. Longer term, I see a stock here that is very, very cheap for what is a market leader that is trading at a significant discount to the market. So, you know, I've been buying some of the stock myself. I know that it's, like I said, a lot of people have strong opinions on Pfizer. I know it's a controversial stock these days, but I'm just talking about it from a stock perspective alone. It does look pretty attractive, but that's just my opinion. Okay, with that said, it's time now to finish up here with the third and final stock of the list. And, who would have thought that I'd actually be choosing this stock to be a high risk one, considering how popular it's been in recent history with unbelievable gains. And I'm talking, of course, about Tesla, ticker symbol TSLA, which used to be a very high flyer and to this day is still up over 800% in just the past 5 years alone. However, from the top, it has now lost well over half its entire value and could very well continue to sink even lower from here. In fact, that's why I consider it to be such high risk at the moment. Now, I know many of the Tesla bulls might call me crazy for saying that, but you have to look at the facts here. For one, Tesla's growth has been slowing way down in the face of rising competition, where they no longer benefit so heavily from that initial first mover's advantage in EVs, as tons of legacy automakers like GM, Ford, Toyota, and more have been pouring many billions of dollars into hybrid and battery electric technologies. Not to mention the rise of Chinese competition too, which is probably my biggest fear of all for Tesla, considering that Elon Musk recently mentioned in their last earnings call that Chinese car companies are some of the most competitive that he sees in the world, and that he thinks they will likely have significant success outside the country, even going as far as to say that they'll pretty much, quote, pretty much demolish most other car companies if trade barriers are not put in place to kind of stop them, which is pretty scary language coming from someone who is usually, so strong-willed about his companies and how much better they are than the competition. But because of these rising threats, a pricing war in the EV market has broken out recently in both China and elsewhere, which has only been exacerbated by the high inflation and high interest rate environment that is hurting the broader market at large, which Elon has directly pointed to many times as a reason for them having to cut their vehicle prices by so much, saying that people hesitate to buy new vehicles if there's uncertainty in the economy, and adding that high interest rates are making cars unaffordable for consumers and will need to come down, as the higher financing costs have in some cases almost entirely offset Tesla's price reductions. And as a result, Tesla's margins have been falling for some time, which is a big reason for why investors are now selling out of the stock, given its sky-high valuation that is still several times more expensive than the sector. However, that is still around 50% cheaper than their own 5-year average, and there's a few reasons to believe that Tesla can still turn things around, and that all of the current pain may be more of a cyclical downturn that can eventually be grown out of. For one, Tesla is actively working on a new, cheaper mass market vehicle that could reduce their cost by 50% or more based on estimates. Not only would that cost reduction help Tesla's margins, but it would also mean a huge growth spurt in vehicle deliveries because of the cheaper price tags, which is one of the most, kind of closely watched metrics by investors, is their vehicle deliveries. Now, on top of that, Tesla still has plans to build a gigafactory in Mexico, with reports saying that more factories could come to Thailand, India, which by the way could include a new car for developing nations. How big would that be? And also in Italy, that may even include electric vans, which would be a first for the automaker. But even Tesla's already existing vehicles continue to sell very well, with the Model Y being the best-selling vehicle in the entire world, including every car type, by the way. That's not just EVs. Plus, there's all the other things that Tesla does as a better, more diversified tech company than traditional automakers that they compete with, like, for example, the Tesla Bot, which, they are also saying recently that it could cost less than half the price of a car, and there's huge implications that it will be used in factories and for manufacturing and for other companies. So there's a lot of different ways that they could actually market and sell the Tesla Bot, not just to consumers, but also to other companies. And I think that could be a big growth driver for them longer term. And who knows what other things they, surprise us with in the future too. But on top of that, there's of course the Tesla Semi that continues to be praised. There's energy and storage, which doubled in size last year. And there's of course autonomous driving, which could end up being not just the biggest growth driver of all, but also their highest margin business long term, especially with the launch of a robotaxi service, as well as licensing out the technology to other companies in the future too. Of course, the problem remains though that all of these things that we talked about will still take significant time before we see them ramp up in a more meaningful way. And that's primarily where I feel that most of the risk comes from, is that a lot of these things are going to take time. And at the moment, this being a bit of a downturn in the EV market, a highly valued stock like Tesla, also at a time when the market itself is trading at, like record highs, a stock like this would be a good candidate to get punished. So that's why we're seeing Tesla stock go down. And it, like I said, it could be headed lower too, but longer term, I do think there's a lot of still potential there. And so considering how much the stock has crashed already, it might not be the worst time to start, very slowly building up a position in this one, at least a very cautious one for the longer term. Of course, I own Tesla stock myself. It is one of my largest positions, and I have no plans of selling it anytime soon. But we'll have to see how it does longer term. Hopefully, it does well. Anyway, those are my thoughts on Tesla and the other stocks that I mentioned today. So I'd love to hear your thoughts. Please let me know down in the comment section. Do you like any of these? Do you agree with any of them or anything I said? Do you have any other opinions you'd like to share? And are there any other stocks that you guys are buying or that you would like to list as a low risk, medium risk, and high risk? Let me know down in the comment section. I think that'd be fun to see what you guys like and what you're all buying and stuff like that too. But anyway, I hope that you're all doing well, my friends. Thank you again for stopping by. Thank you for all the support. It means so much to me. And I will catch you in the next video. All right, take care, everybody. Bye-bye.